At 3:42 p.m. London time on Friday the 28th of August, 2026, the euro is trading near 1.1595 against the dollar, down 0.48% on the day. The trigger was not a data release, but a single Jackson Hole speech. Fed Chair Kevin Warsh shifted the implied probability of a September U.S. rate rise from 36% to 57%. For eurodollar traders, this is a sudden repricing, putting the dollar back on the front foot after days of tight consolidation. Before Warsh spoke, euro to US dollar was already lower at 1.1645, down only 0.07%. It had touched 1.17055 on August 21, near a 3-month high, before losing 0.466% over the week. Warsh told markets that price stability is the predominant focus, financial conditions are hardly restrictive, and underlying inflation has not meaningfully improved. He also said the 2% PCE target is firm and fixed. Cleveland Fed President Beth Hammack said the Fed should act now, warning inflation could end the year around 3%, while Kansas City Fed President Jeffrey Schmid also stressed persistent inflation. The European Central Bank is readying a September hike, partly due to the Iran war, but is reluctant to signal more. Strong French and Spanish inflation points to a hotter eurozone number next week, setting up a genuine policy tug-of-war. This is not a subtle shift, it is a coordinated hawkish signal. Breaking below 1.1600 matters technically and practically. It slices through the 1.1620 to 1.1630 support zone and opens 1.1575 as the next downside magnet. For European consumers, a weaker euro makes dollar-priced energy and imports more expensive, feeding inflation. For exporters, the currency boost helps, but not enough to offset high energy costs. Interestingly, traders are still pricing about 40 basis points of additional ECB tightening by year-end, with a September hike almost fully priced. That ECB cushion explains why the euro has not fallen harder, but the stronger dollar is still tightening global financial conditions, which can pressure emerging market currencies and commodity-linked assets. That matters because a stronger dollar usually weighs on global trade and risk appetite. Looking ahead, 2 inflation releases will decide the next leg. First, the U.S. core PCE deflator, the Fed's preferred gauge. If it stays sticky, September rate rise odds could climb above 60% and extend the euro slide. Second, next week's eurozone inflation report. If it accelerates as the French and Spanish prints suggest, the ECB may have to sound more aggressive, which could put a floor under euro to US dollar. On the chart, the pair is testing the lower edge of a falling wedge. Holding 1.1575 could trigger a sharp bounce. A daily close below it would signal a deeper sell-off. The slide below 1.1600 is a warning that central bank divergence can flip quickly. Warsh has shifted the Federal Reserve debate from whether to tighten to when and how firmly. For eurodollar traders, the key levels are 1.1600 and 1.1575, and the key events are next week's US PCE and eurozone CPI prints. Those data points, not the speeches, will determine whether this is a short-term shakeout or the start of a stronger dollar trend.